Welcome to Markets Now. I'm Michelle Rook with John Heinberg, Total Farm Marketing. A mixed day in both grain and livestock futures trade. And John, let's start off in the grains, talking about the wheat market. While we saw a strong close above some key resistance in the winter wheat contracts, was this all fun buying, and can we keep going?
Yeah, that's going to be the big question. The late price action today kind of tells us that maybe the money still wants to push this market a little bit, closing above that recent low that we put in last week when we reversed this market over, topping through, just poking through the $7 handle on Chicago wheat, getting through that $7 handle on the KC wheat. Those are some big technical barriers. So I think Wednesday's trade could be very, very key. Can we get through that window and actually climb past it? So I would assume there's a lot of selling orders sitting up here at the $7 handle. It's just a big area of psychological resistance that we have to get through. So that'll be something we'll need to watch. Obviously, continue watching the news wires, what's going on with that Russian crop. That's been the trigger. When the world's largest exporter of wheat on the global market is having issues and those prices are on the climb. That's going to lift everybody's wheat prices, including the U.S. supplies, even though our demand concerns with U.S. wheat, kind of still can overweigh those price moves. So that's going to be the biggest thing the focus is for basically going on the Wednesday's trade.
Meanwhile, corn and soybeans did not follow wheat. So did we see some corrective selling there, or was that this faster than expected planting pace?
Those planting progress numbers weighed on the market. We saw a big jump in corn planting, solid jump in soybean planting. In fact, soybeans are trading about 3% ahead of the 5-year average here in this window. Corn still about a percentage point from the 5-year, but I'm still kind of watching that pace in Iowa and Illinois, obviously your two largest corn producing states, still trailing behind that 5-year average. Iowa at 8% underneath that number. Saw a lot of rain over the last couple of days, so we'll see if that kind of limits that crop or limit that planting pace. Can we get the rest of this crop in? That last 10-15% might be a bit of a question mark, especially considering the forecast stays at least wetter through the end of the week.
Yeah. So beyond planting pace, did corn and soybeans also see some corrective selling? I mean, did we run up into chart resistance again?
The technical side of the charts are still pointing to the downside. Now, wheat's going to obviously probably be the leader there. And if wheat can break out and get going, it's going to pull corn with it. So some technical selling today. We got back above the 100-day, hit the 10-day moving average. That seemed to ping pong us back and forth there today. So we will need to kind of see how it goes. If today was more of a consolidative type day, here at the bottom of the most recent move or in that window. So soybean side, again, I still think there's a lot of outside forces still coming into play there. Obviously, the South American crop, the competition on the global scale. Now, we've seen Brazilian prices on the rise, so getting the U.S. bean a little bit more competitive. Maybe some rumors China was picking up some beans for July, August came out yesterday afternoon. So we'll have to see if that plays out, later on. We see those export sales numbers. So, but that firmer price in beans, throw in a little bit of a late harvest window with some wet harvest in Argentina, give beans at least some footing here. But again, still the charts as well as just the time of year and the competition that we need and the lack of demand keeps beans a little bit skittish for me.
With the forward spreads work in the last couple of days, it doesn't surprise me there was rumors of some old crop business. But what about new crop? China has not bought any U.S. beans yet, have they?
New crop continues to be a real concern for both corn and soybeans. But on the soybean side, we're at about 1 million metric tons behind where we were last year in this time window. And like you said, China has not stepped into the market with a known sale. Now, unknown destinations have bought some beans for new crop. But again, we don't know those are, who they're tied to. They could be another country besides China, even though typically in the past, unknown equals China. So, but we haven't seen that at least published sale with their name on it yet for the new crop side. That could happen. We could see them step in the market. I have a feeling it'll be in very, very quickly. It'll be aggressive. We'll have 6-7 days of them picking up some beans, and then that window might close because if you saw that last USDA report, we're looking at a soybean crop out of Brazil that could be pushing 170 million metric tons next year, as well as continued good production in Argentina and giving the Chinese a definite outlet as we get to the first of the year.
Yeah. So cattle market had a decent close today. Not even decent. It was a good close, closed above some key resistance areas on the June. Are we building better cash ideas in, or was this the box beef values being up at noon, or what?
It's a combination of the two. I mean, obviously the anticipation of cash continuing its uptrend. We traded $2, $3, $4 higher last week off some good numbers, but that's all being driven by that box beef price. I mean, we moved box beef to 314 choice this week on Friday, and then held that Monday, and then stayed there again today. That's the highest level since March for choice beef. So obviously that's probably tied to the Memorial Day holiday coming up. Retailers stepping into the market, making sure they got supplies secured as we get into that time frame, get those retail sales, on their flyers, that type of thing. So we'll have to see if that can continue here as this week moves on. That gives the Packers more margin with that stronger retail price. That should help out cash again this week, as the momentum's definitely in the favor a little bit here of the producer. Great close today. It was good to see that market really hold in there after a good week next week, but we got cattle on feed Friday, so we'll have to be a little cautious. We probably get pretty choppy as the week goes on before that report.
Yeah, that's a good point. We should mention the futures discount to cash, though, is going to be a good supportive factor too, isn't it?
Very much so in both the cattle markets. Again, the cash market just continues to be an aggressive and holding a good basis over top the futures. So do we get to see that narrow, especially with the June contract getting closer to expiration, to get up there and meet that 190 cash level that we saw in the highs last week?
And hogs just cannot buy a break here. Are we continuing to see technical selling, or is that the futures premium to the index that keeps weighing on that market?
To me, it's a combination of both those things. Again, first off, think about that front month June contract, still holding about a $4 premium over the index. Index was lower today slightly. We need to see that cash market start turning itself higher instead of grinding sideways here to help out that market. But we're holding the 200-day moving average on June, so we're in an area where technically we can possibly hold here. And we usually see some strength as we get closer to the end of that June contract. So we'll have to watch what's happening with the retail side, the cash side. But right now the sellers are just in a little bit of control of that market, and there's still a lot of room in terms of fund length that they can push this market lower and get out of the long positions.
Yeah, I was going to ask you about that, because I think the funds are still long over 55,000 contracts or so.
Very much so. And it's in that area. Now it's down from 100,000, but again, still a long way to go. Flip side, cattle's about 40,000 long. Last year in this window, they were over 100,000.
And the milk markets, we've had such a nice run off the lows, over $5 in the class 3 milk futures. Today, a limit down day. What happened?
Well, first it started with a couple days ago, we saw a bit of a reversal off the top, rallied, re-challenged it, reversed off that session yesterday. So the technical side kicked into an overbought market. USDA milk production report really didn't show us anything. It was fairly well expected and came in that way. Then cheese trade dropped out 6 cents on barrels and 5 cents on blocks today. Flip that. And that basically sent the sell signal out there. There's not a lot of players in the milk market sometimes, so things move very, very quickly if the message is turning negative.
Okay, thanks as always, John. John Heinberg with Total Farm Marketing. That is Markets Now.